Ladies and gentlemen, boys and girls, it is now time for the best real estate podcast online. It is time for Lakeway Area Real Estate Talk Live with Mike and Dave Elkins, presented by Elite Realty Group.
Let's bring some real estate information to the people today, as they always like each and every time. Again, we go on the show, we try to give you some real estate information so that, again, you will feel prepared. Whether you're a home buyer or a home seller, we want you to be the most prepared people that are out there, again, that is in this real estate market that we're in here today. So we're going to give you 5 essential home buying considerations if you, again, are in the market now or should be in the near future in the market to purchase your first home.
Good morning, Margaret.
Margaret's here. Good job, Margaret. Glad that you're with us today. Like, share, and invite. Get this out to as many friends as possible. We find out that when we assist people in purchasing a home, that's what we do, right? We assist people in doing that. That, again, a lot of times people will just get this idea that home buying is something that they should do. Mm-hmm. It's not always something that you just need to rush into, jump into. Right. There are things that you need to consider prior to, again, ever going down that gauntlet, as I said earlier, in the home purchase process. There's things that you need to look at, you need to consider. If you're purchasing this home with someone else, whether that be a spouse, a friend, whatever, a family member, there's some conversations that you guys need to have, again, to make sure you're prepared in going forward. And you got everything in a row, because it's literally the largest purchase you're ever going to make in the history of your life.
Usually.
That's usually. That's a good term there. Yeah. Usually. So again, you need to be prepared for that and make sure you know all that there is involved with it. So we're going to give you 5 things you need to consider today prior to entering into the housing market. Here's the first thing. You need to look at and consider your job and your current financial situation.
It's very important.
Very, very, very important. First of all, you have to have a job.
And it better be a stable one.
That's what I'm going with. You have to have a job to purchase a home. That's just what you got to do, right? Normally, you got to have a job to purchase a home. There are other things. Yeah, there are other things, though, that determine that. Again, retirements and so on and so forth, all of that. Excuse that part of it, but you have to have some kind of income. That's what we need to say there. But you also need to look at your financial situation as far as what kind of bills do you have? What are something? Do you have long-term debt? Do you have short-term debt? Do you have auto? Do you have this? Do you have all of that stuff that you need to look at? And you got to sit down then and say, all right, when I look at all of these things, what am I going to be able to do? What am I really going to be able to do? A lot of times our eyes get us in more trouble than our purse or our pocketbook or our wallet, whatever you want to call it, can get us out of. But you're exactly right. On your income, do I have a good, stable income? Because one of the worst things that can happen, and we hate to see happen of anything, is someone purchase a home, get so excited about that, and then that financial situation change, the job and their finances do change. Now, I understand you can't predict the future. And you don't always know. You may have a stable job right now, and who knows what's going to happen 6 months from now.
Right.
But you need to make sure, again, that it's something that you're not going to yourself make a self-inflicted problem that you're going to want to be hopping around. Because no matter what happens, your job may change, your income may change, your financial situation may change. But what's not going to change is that monthly payment that's due
for like the next 15 to 30 years.
Absolutely. That's not going to change. So you want to look at that and again say, am I in the situation where I need to move forward and purchase a house? Right. We are fully telling you purchasing a house is a good thing to do.
Exactly, yes.
But you need to have some consideration.
Make sure you got stuff lined up first. Right. Don't just jump in thinking. Again, a lot of people, there's a certain time frame you got to be on you got to be at your job.
So long.
A lot of people, just as soon as they get there, they get it. And we've heard of a lot of people buying houses, and it's not long till they're laid off. You know, so you just got to take all that into consideration. Is your job one of those places that lays off regularly?
That's right.
So think about that.
Is it a good, stable work environment again, where people that get there and do their job show up on time? They're not going to send you home.
Right.
You know, they're not going to send you home in 6 months. There are positions out there, again, they're a good stable position, but where it gets slow, they send people home. Well, if they send you home at 30 hours a week versus 40 or 50, how's that going to affect your financial situation in purchasing your home?
That's another thing I was just going to say, too. Even about, a lot of times people look at it with their overtime and stuff involved.
Yes.
You don't need to look at that.
No.
You don't need to look at that.
That's the gravy later. You need to base your financial situation on what you're guaranteed to get. On what that is. So again, we're talking about today 5 essential home buying considerations that you need to highly consider. Again, you need to have conversations with spouses, friends, family members, whomever you're going to be purchasing this house with. If it's just you, it's a little bit more pressure on you just by yourself, being the sole income of the home or whatever, who's going to pay that payment. A little bit more pressure on you. So again, these are some things that you need to consider, because sometimes it's harder to get out than it is to get in, right? So again, you want to be prepared for that. So that's number 1. What do you got for number 2?
Number 2, types of mortgages, such as, you got a few options. Of course, you got the cash option, which everybody likes the cash, but then you got a fixed rate, and then you've got the adjustable mortgage rate.
Right.
So of course, look at that and see the way you want to do that. The fixed rate, of course, you're going to have the same interest rate and all that stuff for the life of the loan. Of course, the 30-year loan, you're going to have lower payments.
Yes.
But you are going to have to pay more interest.
Right.
So, of course, and then you got the 15-year, which you're going to have a little bit higher payments, but you're going to get it paid off in 15 years, pay less interest.
Right.
And then you've got that adjustable rate mortgage. Mm-hmm. A lot of people, some people like that. Me, I think it's a little dangerous.
Right.
Because after
Should interest rates
go up,
then
you don't, again, like you just said a minute ago, nobody can predict the future. So a lot of times they do that 5-to-1. You've got for the first 5 years, you've got a guaranteed interest rate. And then after that, every year
to year,
your interest rate can basically change. So if you're going to do that, make sure that you take that into consideration.
Right.
That can I allow for, I've got a 3.75% interest rate right now. Can next year I allow for a 5?
Right.
Because again, you never know.
And, again, looking at those things, for those that may not know, your interest rate is a big deal.
Yes.
That interest rate changed by a few points,
a big difference on your
hundredths of a point. Either way, it's going to skew your payment. So you look at, the 5 and 1s, usually, again, for the first 5 years most of the time. There are different kinds out there, but that's locked in. But then year to year, you could literally jump up, major on your payment from year to year, which could put a big financial burden on you. Now, again, depending upon what's going on in the housing market. Can you get out of that?
Can you get out of that?
Or is it going to take an act of Congress to get you out of that?
Right.
Or is that something that could potentially enter into foreclosure, which is a road that you do not, if you don't have to go down.
Right.
We understand sometimes that has to be done, and that's okay.
Right.
But if you don't have to go down that road, you definitely don't want to. Right. So that's number 2.
Good morning, Noah.
Those just joined, like Noah. Make sure you participate in our poll question this morning. We want to know, what is your favorite soda pop? List that in the comment boxes. We've already got some great answers in the comment box. So again, put yours in there. Let us know, what is your favorite soda pop. We're talking about 5 essential home buying considerations that you need to have the conversation, the thoughts you need to plan out, map out prior to you purchasing a home. We've went through the first 2. Here's the third one. You need to consider your credit score.
Yes.
Credit score is a big thing. We just talked about interest rates. Credit score is a big thing when it comes to what type of interest rate do you get.
Right.
The higher your credit score, typically the better your interest rate, the better terms of the loan, the better insurance rates that you get. A lot of people don't know that. Your insurance rates are typically based upon your credit score.
Yes.
Your auto insurance rates, your homeowner insurance rates. That is based upon a credit score situation. So again, the better the credit, the lower the interest rate, the lower the insurance premium, because they don't see you as a risk, because again, you've took care of what you needed to do. You've paid your bills. Now, here's one of the questions I think we get most of all, and let's spend just a little bit of time on this. There are a lot of people that are out there right now that are going to have everything they need to have. They're going to be stable jobs. They're going to have good finances. They know the type of mortgage, 15s, 30s. and everything else that we're going to tell them. But potentially their credit score is not where it needs to be.
Right.
There are companies that are out there. There are lenders that are out there. Depending upon which one that you choose, and I stress that, you need to choose your lender.
You do, yeah.
You need to choose your lender. Don't let anyone tell you this is the lender you need to use. You need to choose your lender. Don't be afraid to take recommendations,
right,
but make sure you can work with them. But there's lenders and there are companies that are out there that will help you get your credit repaired so that you can have that better interest rate. Right. Now, here's you a tip, literally a tip. If your credit score is not where it needs to be right now, in as little as 3 to 6 months, in a lot of cases, a credit repair company or a good lender that uses these systems to tell you what to do with your credit score can get it from point A to point B, which will drastically change the interest rate and the terms of everything that has to do with your house, thus making it a lot cheaper.
I tell this story all the time when I talk to people, but again, we have lenders that we work with. We try to recommend 3 or 4 different ones, so
right, so that you can choose.
Right, so that you can choose. But so I recommended a lender to this one girl. It's maybe been a year or so back now, but she was about 60 to 65 points away from having the credit score that she needed.
Right.
And so in literally it was like 45 days. He got her score.
That's great.
And a lot of times it's just little things.
Yes.
Little things that you can do, make a phone call and they'll take this off, blah, blah, blah.
Right.
So just little things to where she had actually been to other places and they had told her no.
Right. Right.
And that, a lot of times that's what you get is just no.
No.
You can't.
And no offer
no
to help.
explanation as to why, what can I do different.
Right.
So yes, take recommendations and,
check it out for yourself.
Get the answer that you want.
Yes, check it out.
There's always somebody that can tell you what to do.
Absolutely. Yes, there's always help out there. Just seek it out. Seek the people again. It's all who you know, so if you know the right people that can point you in the right directions, but at the end of the day, it's going to be your decision and your choice as to who you do or do not work with. So that's
right.
Number 3. What do you got for number 4?
Number 4 is things to consider is the price of the home. You might
right.
think that's silly, but so the price of the home, just because I tell people this so many times, if you go to a lender and they say, Mike, you can buy up to $300,000.
Right.
That don't mean you have to buy $300,000.
Right.
Take that into consideration because other than a house payment, there's life involved.
Yes.
Okay, you're going to have things come up.
Right.
You're going to want to go on vacations. You're going to want to go out to eat at nice places.
Right.
You're going to want to do this stuff.
Yes.
Don't be house poor.
That's right. We talked about that before. Yes.
Yes. So the higher. And again, this is coming from realtors. You know what we get paid on?
Yes, the
price. Okay,
yes.
So
right.
you would think we would say yes. If you could buy $300, buy $300. That's not the case because we don't want you to come back in 6 months and say I got to get rid of this place because it's about to kill me. I can't live. You're going to have to live.
Yes, life happens.
In other shows we've talked about, you're going to have repairs that come up. You're going to have to live.
Right.
So obviously, the higher price the house. The more the payment.
Absolutely.
Okay?
Absolutely.
So just keep that in mind.
And again, I heard a person say one time, again, when it comes to the price of the house, which is another good reason you need to look at this, is when you purchase something, and again, I know a lot of times we don't think of this because when we're purchasing a house, it's usually always the perfect house. Right? But we have people purchase the perfect house and call us back a lot of times for us to help them sell the perfect house, which is fine. But you always need to be looking at your exit, your out. What is going to happen if I do need to get out? Right. Should my job situation change? Should this change? Should my financial what do I need to look at to get out? The price of that home is going to be a big deal to do with that. Right. You overpay for the house, that out's much harder, right? So that's why you need to look at the price of the house. The last thing we want to give you today is, again, when considering 5 essential home buying considerations, the last thing is the down payment. Now, it's a very popular thing. We've discussed it on the show before that there are programs that are out there right now that are 0 down payment programs. Right. And those are great. Those are absolutely great. No money down, 1.5% down, 3% down, so on and so forth. There are all kinds of programs down. But just because that's out there does not mean that that's the right thing for you, because you just mentioned a $300,000 house.
Yeah.
If you put money down on that $300,000 house,
you don't have a $300,000 payment.
That's exactly right.
Yes.
So again, just because that it's out there that you can go 0, you can go 1.5, you can go 5, you can go whatever. If it's better for you in your current situation, that's why you need to be the boss. You know, you need to take the bull by the horns and say, this is my life, this is my home, this is my situation, I'm going to make it work out best for me.
Right.
Don't worry about anyone else other than you and your family, or the people that are going to be depending upon you for this roof over their head. But a down payment can be a great thing, even though you don't always have to put it down.
Right.
It's something you need to consider. If it makes things better for you, put the down payment down. Because again, unless we would have this catastrophic crash that lasted for 20 plus years, which has never happened.
Right.
The real estate market has crashed, but what goes down will always come up, what goes up will always come down, so on and so forth. You're going to be able to recoup your down payment in the right type of market.
Right.
It's not that you're going to lose
Right.
money.
And then speaking about down payments, I'm going to throw this out there. I can't remember if I said this, but I remember it was last week. Remember when I told you about that, what that lender told me?
Yes.
So if you have a down payment, don't think that you're completely ruled out, because I talked to a lender last week. I might have already said this on the show, but he told me, it was not my client, but he told me that they had literally just closed a deal on a person that had a 506 credit score.
Wow.
And that's because they had a down payment.
The down payment.
So I honestly didn't realize that a down payment played that much into it.
Right. Yeah, it can be a big thing.
It can be major, I guess. I mean, obviously, don't, if you've got a down payment, keep your options open. It might still be a possibility for you.
Right. So again, we've gave you today 5 essential home buying considerations, things you need to look at, again, prior to entering to your home purchase process, the gauntlet, as we like to call it. We've gave you 5 of those essential home buying considerations today.
We thank each and every one of you for listening to today's podcast. Tune in for future episodes by subscribing to our channel and get the latest and greatest real estate information right here on Lakeway Area Real Estate Talk Live, presented by Elite Realty Group. Until next time, have a great and blessed day.